Yeah, I mean, I think we'll get a bit of a sense from the Jackson Hole meeting on Friday what the Fed's thinking, but I suspect that they won't make any wide-ranging changes to their outlook. And over the last month or so, we've seen quite a lot of commentary from the Fed, really setting out in fairly good detail their upgraded view of the US economic outlook. They've updated their dot plots recently, and we've got a meeting in September that's very live. I suspect that they'll focus less so on changing their outlook for rates, which continues to be for a couple more this year, a couple next year. I don't think they'll go into any major changes to their outlook based on some tweets and interviews from the President Trump.
Yes, and many economists, investors even will say, nor should they change, because if you look at the data out there, the U.S. economy is growing so strongly already. They're waiting for the full effects of the stimulus plan already underway here. And it does kind of come to me as a bit of a surprise that President Trump keeps saying he needs help from the Fed, because many of the policies they've put through are really forcing the Fed's hand in some ways to tighten.
That's right. I mean, I think that President Trump is looking at what's happening to the US dollar and thinking that's not great for his trade negotiations. But the result of the US dollar strength really reflects widening interest rate differentials against many other economies. But it also reflects the fact that the US economy has been strong recently. We saw a very strong economic print for Q2. We think that that's likely to persist through the rest of this year. Not quite as high. We've probably seen peak growth for the US, but that sort of follows through into next year, where we'd expect to see growth being around potential or a little bit above. And all of that just points to inflation that's likely to continue to pick up. And as a result, I think the Fed has, in some ways, its hands tied. It needs to hike rates. It's told us that it will do that gradually. And I think that's the pathway that they're going to take over the next 18 or so months.
And of course, the Chinese currency has been vulnerable to the moves higher in the greenback. Today, though, officials, in fact, boosting the yuan by the most in a month. Do you think this is intentional as we try to set the stage here for the resumption of talks between the U.S. and China?
Yeah, I mean, I think that what we're seeing in the yuan is some weakness leading up to the recent announcement of further negotiations. It's probably likely to trade sideways a little bit. I don't think China has any real desire to let its currency weaken further. At the same time, it's not likely to move into the market and try and strengthen it aggressively while negotiations persist. So I would say that we're going to see a lot of focus on Chinese markets over the next week or so after the announcement of the resumption of trade negotiations. But at the same time, it seems unlikely we'll see any major announcements in the near term, and that's just likely to keep uncertainty high. The range of possible outcomes from trade negotiations is wide, and I think that's being reflected in the markets fairly well at the moment. I mean, people are a little uncertain about where this goes, and so we're not seeing a resumption in bull market. We've certainly seen weakness in Chinese economies, and I think that does open up some opportunities as a result.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.